This is Bob Gersh with East Coast Capital. Today's topic, what is going on with mortgage rates? What is going on with mortgage rates? You may have heard mortgage rates are going to stay a bit higher for longer than originally expected. And if you're wondering why, the answer lies in the latest economic data. Here's a quick overview of what's happening with mortgage rates and what experts say is ahead. Economic factors that impact mortgage rates. When it comes to the mortgage rates, things like the job market, the pace of inflation, consumer spending, geopolitical uncertainty, and more all have an impact. Another factor at play is the Federal Reserve and its decisions on monetary policy. And that's what you may be hearing a lot about right now. Here's why. The Fed decided to start raising the federal funds rate to try to slow down the economy and inflation in early 2022. That rate impacts how much it costs banks to borrow from each other. It doesn't determine mortgage rates, but mortgage rates do respond when this happens. And that's when mortgage rates started to really climb. And while there's been a ton of headway seeing inflation come down since then, it still isn't back to where the Fed wants it to be, 2%. The graph posted on my blog at askbobgersh.com shows inflation since the spike in early 2022 and where we are now compared to their target rate. As the graph shows, we're much closer to their goal of 2% inflation than we were in 2022, but we're not there yet. It's even inched up a hair over the last 3 months, and that's having an impact on the Fed's plans. As Sam Cater, chief economist at Freddie Mac, explains, strong incoming economic and inflation data has caused the market to reevaluate the path of monetary policy, leading to higher mortgage rates. Basically, long story short, inflation and its impact on the broader economy are going to be key moving forward. As Greg McBride, chief financial analyst at Bankrate, says, it's the long-term outlook for economic growth and inflation that have the greatest bearing on the level and direction of mortgage rates. Inflation, inflation, inflation. That's really the hub on the wheel. When will mortgage rates come down? Based on current market data, experts think inflation will be more under control, and we still may see the Fed lower the federal funds rate this year. It's just later than originally expected. As Mike Brantinelli, chief economist at Mortgage Bank Association, said in response to the Federal Open Market Committee, FOMC, decision yesterday, the FOMC did not change the federal funds target at its May meeting as incoming data regarding the strength of the economy and stubbornly high inflation have resulted in a shift in the timing of a first rate cut. We expect the mortgage rates to drop later this year, but not as far or as fast as we previously had predicted. In its simplest sense, what this says is mortgage rates should still come down later this year, but timing can shift as new employment and economic data come in, geopolitical uncertainty remains, and more. This is one of the reasons it's usually not a good strategy to try to time the market. An article in Bankrate gives buyers this advice. Trying to time the market is generally a bad idea. If buying a house is the right move for you now, don't stress about the trends or economic outlooks. The bottom line. If you have questions about what's happening in the housing market and what that means for you, let's connect. This is Bob Gersh with East Coast Capital. This blog, video, and podcast Monday through Friday at askbobgersh.com. If you have any questions, reach out to me through askbobgersh.com. If you see me at a local coffee shop, tap me the shoulder, let's sit down, have coffee, and talk about whatever you like to talk about. If you like what you just heard, please subscribe to our site. We'd really appreciate that. And if you are looking to list a home in the next year and or looking for listings in your local area, check out our TV show for that information. To find out more about our TV show, give us a phone call at 781-454-7138, and we'll fill you in with all the details. Thank you. Have a great day, great rest of the week. Enjoy life. Until next time.